Nothing scares people more than getting audited during tax season. So today's episode, I'm going to be teaching you all 8 ways to avoid audits in 2024. What's up, family? Welcome back to another episode of Tax-Free Living, where I teach entrepreneurs just like you how to live tax-free. Now, as you all know, we just entered a new year. 2024 is upon us, so that means that tax season is upon us as well. So if you're worried about getting audited, don't worry about that. Today's episode, I got you. All right, before we get into that, again, my name is Carter Cofield. If you've been following the channel for a long time, I appreciate you. If you haven't, hit that subscribe button so you can know when our videos drop. Every week, we're giving you new videos on taxes, investing, and growing your business. So if you haven't yet, smash that subscribe button, and then let's get into today's episode. Now, before we get into today's episode, personal question. I'm thinking about cutting the beard, guys. I don't know. The beard, I like it. It's filling out, but I don't know if I want to keep it another 6 months or so. So y'all let me know in the chat, beard or no beard. Personal question, asking for a friend. All right, so let's go over these 8 strategies, and then I'll dive into each of them as I explain. So, strategy number 1 to avoid getting audited, right, is to file your tax return on time. Okay, one of the easiest ways to get audited is when the tax deadline passes. If your tax return is not submitted by then, they look at how many tax returns are we supposed to have, who filed last year, who hasn't filed yet. Oh, well, let's do some digging, right? So make sure you file your tax returns on time. See, what happens is most people, they get nervous or they don't have their paperwork in order, so they just don't file, right? They like ostrich with their head in the sand. They don't want to face the taxes, so therefore they don't do anything about it. And here's a big misconception that most people do not know. The failure to file penalty is more expensive than the failure to pay. Okay? I'm gonna say that again. The failure to file penalty is more expensive than the failure to pay penalty. Okay? Most people don't file their taxes on time because I don't got the money to pay the tax bill. Okay, fine. But at least file it, because the failure to file penalty is 5% per month. Okay? 5% per month. So every month that you don't file is going to be a 5% interest on whatever balance that you owe per month. Okay? So make sure you file your tax returns on time so that you can avoid getting audited. Okay? Tip number 2 to avoid audits in 2024 is you have to beware of industry averages. Right? So what do I mean by that? So when you set up a new entity, they ask you, what is your NAICS code? There we go. North American Industry Classification System. They want to be able to know how many businesses are in different industries, right? So the Census Bureau use their stats a lot. So they want to know how many accounting firms do we have in the state? How many photography companies do we have in this state, right? So you have every company or every entity has a different code, right? Why this is important to you is because the IRS also uses this NAICS code, right? And the way they use it is for classification of expenses or industry averages for expenses. So what do I mean? So if I have an accounting firm, right? Normally my equipment expenses won't be that high, right? We got a couple computers. We have some desks, some chairs, but my equipment expense is not going to be that high. On the contrary, if we have a construction company, right, their equipment expense is going to be through the roof. Their equipment expense might be 30% of their expenses for the year might be on equipment because they got trailers, tractors, right? And so if I was to file taxes and my equipment expenses were 30% of my total expenses for the business, that is not common for other accounting firms. So they're gonna pull my tax return in an audit and say, hey, why does this company's expenses not match the expenses of the industry average, right? So it is very, very important that you select the correct NAICS code for your company, because if you don't, you could be putting your company at unnecessary risk because your industry averages for expenses are not matching the other industry averages of other companies. So that's number 2. Okay. Number 3, if you want to avoid getting audited, my recommendation is to avoid Schedule C's. Okay. Avoid Schedule C's at all cost. Why? Because when you have a Schedule C, your Schedule C tax return is in the same tax return as your personal taxes, right? You are completely exposed. All of the expenses that you have, all the income that you have is on the same tax return as your personal. So Schedule C's are the most audited of all the entity structures, okay? Matter of fact, S Corps have a 1,500% less likelihood of getting audited than the Schedule C. Okay, so Schedule C's are the most audited entity of all entities. So you want to make sure, if you can, to avoid a Schedule C. Well, how do you do this? Well, instead of if you have an LLC, maybe you can have a partnership, right? Maybe hire your spouse into the business, and you all can both be the owners. And instead of an LLC and her being on payroll, you all can both be the owners. And now y'all have a partnership. And the partnership tax return is done on a 1065, which is separate from your personal tax return, right? So you can have a partnership, or you can upgrade your LLC to an S corp, right? I recommend you upgrade your LLC to an S corp once your business makes $40,000 in net income or above. But then your S corp tax return is on Schedule 1120S. Right? A different tax return than your personal tax return. So it just lowers your audit risk. Okay. So avoid Schedule C's at all costs. Strategy number 4 is to issue your 1099s on time. Okay. Now, business owners, hear me out. Just in case you didn't know. All right. I'll be the first to tell you. I should be the first to tell you, but just in case you didn't know, if you pay any contractor, right, more than $600 per year, you are required to send them a 1099 for the work that they did. Why? Because if you paid them, let's say $1,000, the only way the IRS can know to tax that $1,000 is if you submit a 1099 for that person, right? And if you don't submit your 1099s by January 31st, you will incur penalties, and it could potentially cause an audit. So issue 1099s and issue them on time, which is January 31st. Strategy number 5, which is similar to this one, is issue your payroll reports on time as well. So you want to make sure you issue your W-2s to your employees on time. And the 1099 and the W-2 issue deadline is the same. January 31st, 2024, W-2s are due for submission and 1099s are due for submission. Now, here's the good news. If you pay your contractors and you pay your employees through a payroll company like ADP, like Gusto, they handle all this for you. So business owners, stop paying your contractors through PayPal, through Zelle, through Cash App. Stop it. If they want to work for you and they want to be a contractor, you need to onboard them into your payroll software. I use Gusto. It's super easy to onboard somebody. That way, when you pay them, Gusto is going to take care of all your 1099s, all your W-2s, okay? So issue them one time or use a payroll company, okay? Now, strategy number 6, and this is big, guys. Like, if you take nothing away from everything I've said today, please take this one, right? This is the most common mistake, and it causes people to get audited over and over again. And strategy number 6 is to avoid round numbers, okay? Let me give you all a story. An example, a real life example that happened. So had a new client come to me about 3 years ago, and he was like, man, I want to switch accountants and I would love for you to be my accountant. I was like, okay, cool. He's like, also, I got audited last year. Can you all help with that? I said, yes, we have partners that help with audit representation. So as I'm reviewing his tax return to see why he got audited, I look at this man's tax return, and I kid you not, all of his numbers ended with 0, right? Income, 0. Expenses, 0. Every single expense, travel, dining, equipment, software, supplies, utility, everything in it in zero, right? So I'm like, of course you're gonna get audited. How many zeros can be in your tax return, right? So I recommend all people avoid round numbers, right? Like avoid zeros and fives at all costs, right? Add some ones, twos, threes, fours, eight, nines. Like just avoid zeros and fives as much as you can. Now I'm not telling you to fudge your numbers, but like, yo, there's only so many zeros that you could put on a tax return before they're like, yo, these are estimates, we're auditing you because we know that you don't have your numbers. The only reason you have all these zeros if you're guesstimating your expenses and don't actually have the proper tracking systems in place. So if you hear nothing else, avoid round numbers like the plague, okay? All right, so strategy number 7, all right? Strategy number 7. Strategy number 7 is simple, but I want to go deeper into it. Strategy number 7 is do not inflate the home office deduction. Okay. So a while ago, the home office deduction was one of the top ways for most people to get audited. And a lot of CPAs told their clients to stay away from home office deduction, right? And that was because 1, people were dramatically inflating it. And 2, there weren't a lot of people working from home 10 years ago, right? But now in 2024, people work from home all the time. So the home office deduction is nothing that I want you to be scared of. Like, I don't want you to hear this and say, oh, I'm not taking the home office deduction. But I do want you to hear this and say, hey, if I'm going to take the home office deduction, let me make sure my numbers are 100% accurate, right? Get the measurements for your home office, get the expenses for your home, do the math, and make sure you're taking it properly. I don't want to scare you off from taking it because I think the home office deduction is a phenomenal deduction strategy to take advantage of. Just don't inflate it, okay? So strategy number 7 is don't inflate the home office deduction. And strategy number 8, last but not least, is avoid excessive travel and dining expenses, okay? So just like home office, this is not me saying don't take travel, don't take dining out expenses. This is me saying don't inflate them, or if they are going to be high, have your tracking documentation in place. So I probably spent over $80,000 last year in travel and dining. Well, just in travel alone. So that I'm not gonna not take the deduction because it's high, but I have all of my documentation, my receipts in place because I travel 2 weeks out of the month, right? And I live in a different country. So my first class flights are expensive. Now, I'm not gonna not take the deduction because it's high, but I'm gonna make sure I have my tracking in place so that if the IRS ever pulls something, I can say, here goes all of my travel schedule for 2024 and 2023, okay? So those are the 8 steps. I'll go through them again. Strategy number 1, file your tax return on time. Strategy number 2, be aware of industry averages. Strategy number 3, avoid Schedule Cs like the plague. Strategy number 4, issue 1099s on time. Strategy number 5, issue W-2s on time. Strategy number 6, avoid round numbers. Strategy number 7, don't inflate the home office deduction. And strategy number 8 is avoid excessive travel and dining. Other than that, guys, those are the 8 steps. Let me know in the comments which step is your favorite. Let me know in the comments which step are you going to take action on this year so that you can avoid audits in 2024. Other than that, guys, smash that like button, hit that subscribe button. I'll see you next time.